Hi, I'm Dan Palomino with KW Big Island and the Hawaii team. Well, I want to tell you something that's really, really important if you are a buyer. So pay attention to this. It's set to go into effect on May 1st. It's a Biden administration rule through the Federal Housing Financing Agency. Okay, so the Federal Financing Agency is the one that regulates Freddie Mac and Fannie Mae. And of course, Freddie Mac and Fannie Mae buy mortgage-backed securities, right? But they only buy conforming loans. So this rule, if it does go into effect on May 1st, would only affect conforming loans. But the rule is basically this. They want to charge, get this, they want to charge borrowers who are buying a house more money if you have a higher or better credit score and if you've put down a large down payment. Now, that doesn't seem, I know, let that sink in for a second. It doesn't seem right. But they basically want to penalize you if you've done well and you have a good credit score, or if you've done well and you've saved up enough for a down payment. And so what this charge is, and they haven't really spelled out exactly how they're going to charge you, but they're basically saying that an average borrower would probably feel about $40 more per month in their mortgage payment on a $400,000 loan. Now, we don't see a lot of $400,000 loans here in Hawaii. We see more like $800,000 loans here in Hawaii, and so you can do the math. It would cost you about $80 more per month for that loan after May 1st than before May 1st. And the reason why they're going to penalize you is because they want to take that $80 a month and they want to be able to provide it to other people who have lower credit scores or don't have enough down payment, and they want to make the credit accessible and loans accessible and rates accessible to people who aren't doing quite as well. And so their solution to this is to charge you more, and I believe the only way that they can do that, they can't do it through a fee because they want it to be an ongoing monthly cost to you, so they can't do it through a one-time fee like points. They're going to have to do it in some form of an interest rate bump. It's going to have to be some type of bump in interest rate to help cover that. But they think that by taking $40 or $80 extra per month for every borrower purchasing a house, doing a conforming loan going forward, that they're going to have this reserve of cash that they can then use to help other people qualify for credit. Now, a lot of people who are minorities or in the poorest part of our society can't afford they don't have a great credit score, so then they don't get a great interest rate, right? And so they think that by taking this money and subsidizing the people who give out loans, mortgagers, and banks, if they subsidize the banks with this money, that they'll be able to offer those people a better credit score. This is the thinking. But again, as you know, if you've been around for a while, and at 54, I know that the government doesn't do anything well. So I'm highly skeptical that whatever money they collected would actually go for its use or do the intended consequences. But there's a possibility that this could get pulled back before May 1st, but there's a good chance it's not going to get pulled back. And if you're going to see a higher interest rate in May, it very well could be because of this new rule by the Federal Housing Financing Agency. Again, the people that regulate Fannie Mae and Freddie Mac. So ask your lender, ask your loan officer, ask your bank, ask whether or not you are paying more because you have a higher credit score and a larger down payment. All right, that's the news for today, and I hope that helps. And as always, if you are looking to buy, sell, or invest in real estate, contact us here at the Hawaii team, 808-913-0899, 808-913-0899, or thehawaiiteam.com. Aloha.